Alright guys, welcome to a new video. If you're new here, my name is Ruben, and today we're going to discuss how you can use ICT's power of 3, a fractal concept to find your daily bias. Let's go. Now on the charts here, this is from the New York session. I want to illustrate this concept multiple days in a row so you can see how this repeats. And if you don't believe me, go back and backtest, have a look at your own charts because this repeats for all sessions. I guarantee you've been there, and I've been there too, where you approach a session, but you're just not sure on the steps to take to form a narrative or form a bias. If you trade the New York session in particular, the ICT Power 3 concept will dramatically improve your trading because have a look on the screen here. We can see what price does. We accumulate, we manipulate, and we distribute. If we go back to previous days, look at this day. We accumulate here, we'll mark this out in gray. We manipulate down like this, we'll mark that out in red, and we distribute here, we'll mark that out in green. Now you're gonna be surprised how many times this actually occurs for the New York session. The same thing happens here, guys. What do? We accumulate here, mark that out in gray. We manipulate down, mark that out in red, and we distribute up, we mark that out in green. ICT's Power 3 concept is a really important one to understand when you're phrasing your narrative or bias. But the next thing you might be asking, well, how do you use it? Before we get into that, I want to draw out a few illustrations here that'll demonstrate what I'm talking about. Now the market can do a few things, guys. It can accumulate like this, it can manipulate down and distribute up, or it can accumulate like this, manipulate up and distribute down. The only way you know the difference between the two is for looking at higher time frame structure. That's how you know the difference. And you combine this with macros and the silver bullet to give your narrative. Now let's go back and do one more example, right? Let's scroll back one more time and let's have a look over here for the New York session. Now, this session, you can see what happens. We accumulate and we manipulate up news event and we distribute down. So you can see it occurs both for the bullish and for the bearish examples, but I wanted to break down starting from yesterday's price action, how you can actually use this to form a narrative and to form a bias. So let's just start off here with the 15-minute chart. And I want to mark out a few things here. Everyone knows this if you're from my YouTube channel, if you've been here for a while. If not, I recommend looking at my other videos, study 15-minute fair value gaps and how price reacts from these levels. So firstly, what you can see here is price sweeps out this low, boom. We sweep out Asian lows, we take out sell side liquidity. That's a really good reaction. We also tap into this 15-minute fair value gap. Boom. So price has swept liquidity and we're finding some kind of support. We've got accumulation, manipulation into a sell side point, and then we distribute higher. The same happens here. If we go back the previous day, we've got a 15-minute fair value gap right here. Price, again, accumulates, manipulates, it sweeps sell side, and then what do? Distribute back up. And we're gonna see this occur time and time and time again. Now you might say, what about here? What's this one do? What's this power 3? We accumulate, we manipulate, we distribute. This power 3 here, go back on your charts. This swing low actually sweeps liquidity from about a week and a half, 2 weeks ago. So we sweep external liquidity. But notice the pattern. Notice when we draw this out, we're looking for these important things. We accumulate, yes, we manipulate, but we're manipulating into something important. There's a sell side liquidity level down here. There's a fair value gap down here. The combination of both is much better than just having one or the other. Now, if you want to see how this plays out in different sessions, we can look at the 15-minute chart here and we can even look at a bigger picture. Like zoom out here and we can see price has accumulated, manipulated, and now we've started distribution. So pretty much all sessions this week, I've been looking for buys. Most of my trades have been longs. Why is it the case? Because we've got this overall bigger time frame power 3. So every time price pulls back, look, every time price pulls back in this range, like this. When price pulls back, I'm looking for longs. If price pulls back, looking for longs. Price pulls back, looking for longs, looking for longs. So when you understand this concept, when you understand how the power 3 is fractal and how you can apply this to not only the New York session like I showed you, but also to your overall narrative building, then it makes it quite easy. It makes it quite easy because we can go back and see this play out time and time again. And these concepts are fractal. So we're going to go through yesterday's example. We'll break that down. And then we'll go through some from the Asian session and also from the London session in previous days. Let's go back here. Let's go back onto the 1-minute chart. Now you're watching the chart, you see price do this. We drop back down onto the 1-minute time frame. And now we're waiting for a reaction that is important. So if we play this out a little bit faster, let's have a look. We come down, we sweep more sell side, boom, we take it out. We're now in silver bullet. So silver bullet exists, as we know, from 10 o'clock. We'll mark this out all the way until 11. Perfect. We've got the 9:30 to 10 Judas swing. And now we're waiting for an inverse fair value gap. Let's see if we get that. Right there is your entry. Boom. Really easy, really clean. Where do you put your stop loss? Enter from here. Stop goes below these bodies. And you target any of this low resistance liquidity, this trend line liquidity. Let's see what price does. Starts to move and eventually takes out your TP. That's a 1 to 1.6. And yes, you could hold for longer. But notice how we're combining different concepts together, and notice how the power of 3 has been the governing factor to build this narrative. So as you're watching the market, you look at the 15-minute time frame, you can observe this accumulation, you can observe this quick move, and then you're looking for that reversal to take place. Let's go back to the previous day, same kind of deal, New York session. You see price chop, 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 market opens, we manipulate down, we sweep out sell side. Now this one's a little bit messier, so it might require a few opportunities or a few entries. But you can see here, we form our inverse fair value gap here. Let me just fix this up. This becomes an entry to go long. Stop goes below the bodies and you target the next level of buy side liquidity. Great. If you miss that one, you can take this one, which is a bit more impulsive, and you can target this buy side. Doesn't make sense. But this is the framework and it applies to all sessions. So that day is from the New York session. For those in the London session are looking, this one's for you now. And this is still important if you trade New York because the same process will apply and apply and apply. So you can see what price does here, right? It's a bit trickier to see, but you can see price accumulates, manipulates very quickly, and then starts the distribution move up. And on this particular day, these are the trades I talked through with the Discord, the long positions. And look what price did. We can do the same for Asian session, guys, over here, right? What's price do? We accumulate, we manipulate, we distribute. We accumulate, we manipulate, we distribute. We accumulate, we manipulate, we distribute. So if this doesn't prove to you or show to you guys that the power 3 concept is a really important tool to forming a narrative or forming a bias, I don't know what will. And like always, if you want more information like this, check out all the other videos on my YouTube channel. Mainly I trade ICT macros, mainly I'm trading dealing ranges, fair value gaps, etc. But this is a really important concept that has changed the game for me. Because when I first started trading, I had no idea how to find a narrative. I'd approach a session and go, what am I looking at? What's price doing? Where do I think price will go? But when you pair that higher time frame, and again, the 15-minute chart, when you pair that 15-minute chart and then zoom in onto the 1-minute chart, it makes life so much easier. You can see these things playing out. Look at this. Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. Bigger time frame, right? And we can go back in the charts and you're going to see this play out time and time again. Even here, guys, look at this. Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. So that's going to be it for today. Hope everyone's had a good trading week. Again, September price action has, in my opinion, been a lot easier to read and a lot nicer to trade. And look forward to a new video on this weekend or next week at some point. Start studying the power 3, guys. And if you're not yet in my free Discord, I post plenty of charting study. I've got 2 checklists and a PDF there for you guys. The link to that will be in the description below. Until next time, guys, I'll talk very soon. Have a great week and a great weekend. Peace out.